Hi, everyone. Welcome Welcome to our fall installment of the Student National Association of Teachers of Singing Chat, SNATS Chat for short, for 2022. If this is your first time joining in, we're so glad that you've been able to tune in for this afternoon. What's going to be a great conversation. I am Austin Vitaliano, alongside my friend, my colleague, the co-host for today, Jordan Reynolds. Hi, Jordan. How are you doing?
Good. How are you doing?
I am doing really well. It makes
Looking
me,
cozy.
yeah. You see the fire. You like it.
Yes,
Um,
I do.
I can't tell you how happy I am that we have a chance in all of the busy schedules and all of the craziness of the year that we're able to get back together and talk about important topics and conversations here. So,
hmm
yeah, thank you. So,
Absolutely. So excited.
yeah, it should be a fun time, a really fun conversation. So, if this is your first time joining in, things have changed around a little bit, and you might not know who we are. So, I just wanted to tell you a teeny bit about myself. I'm Austin Vitaliano. I'm a DC based singer. I sing many different venues around the area, and I'm also a weekend host for a radio station. And so music and voice has always been a really large part of my life. I'm also working for a national nonprofit, and so balancing music and life in general has always been of interest to me, and I know it's of interest to Jordan. So, Jordan, you want to tell him a little bit about yourself as well?
Sure. I was avoiding the airplane, so I was off for a second. But yes. So same thing. I think it's going to be a similar story for most of the people tuning in. Figuring out that balance, especially as a creative, is pretty tricky. So right now I'm balanced between performing as a songwriter. That's my main focus right now is writing and performing songs, um, both for myself and also collaborating with others. And I also teach voice lessons and do a little bit of web iOS development part time. So that's kind of how I and perform at like corporate events and weddings and things like that. So all of those things make make the thing run. So
Yeah.
um, yeah, I'm really excited to talk to Elaine about these things. That'll be
Yes, yes.
really helpful.
Elaine's going to be spectacular. And our origin story, how we know each other, is that we did our master's degree at New England Conservatory of Music in Boston, Massachusetts, where we got degrees in vocal performance, vocal pedagogy, and it's always been a large thread in our lives. And we just have always had that itch about what happens after you leave school and how can you be best prepared to take on a career in music like this. So, Jordan, you spoke about Elaine. If you are an artist or a teacher looking for practical financial tips to help reach your goals, to empower your students in their career, this is the episode for you. You've tuned into the correct station here for today. And before we introduce today's guest for the discussion, we wanted to acknowledge just a few quick things. Number one, first and foremost, we want to acknowledge Eric Hood. Eric, thank you so much for lending your knowledge, for your charisma, and for his industry experience as host for the SNATS Chats in the past 6 years. As he continues to grow with the community of artists and educators, we just wanted to say thank you for leaving your legacy of impactful topics aimed towards early career voice students and teachers that are empowering them to succeed in our modern and ever-changing industry. We hope that we can continue that legacy for you, Eric, and just thank you so much for what you've started here. Number two, if you've never joined a live stream before, some of you will watch a recording, some of you are live right now. Welcome. It's going to be a little bit different here. Your comments are going to really show up in real time, and we'd love to hear from you. Send us your questions, topics that you want to hear for the future. We always want to hear from you. Just remember, please be excellent to each other. Please, no divisive or inflammatory remarks, and just enjoy the show. Anything else before we bring in Elaine?
I think that about covers it. We talked about holistic voice a little bit in our background.
We
I'm not sure if we
haven't.
brought that up.
We haven't.
Let's
If you
bring
want
that
to
up
bring
real
it
quick.
up, how we know each other. Yeah, exactly. Go
Yeah,
ahead.
so we met in New England Conservatory, and we realized that there is some things that we would like to discuss about our careers post graduation and what that looks like. So we came up with the holistic voice, which we have um, a pretty sizable back catalog now of episodes, and Elaine is included in one of those. So if you're looking for more information about Elaine, and we're going to give you some contact info, and you can also go back to our previous episode. Um, at the Holistic Voice.
Yes, exactly. And we'll end up sending more information so that you can, if you're curious or interested, of course, you can check that out as well. So let's bring our guest in for today, and what we'll do is tell you a little bit more about her when we bring her on now. Okay. Let's bring her in now. Ooh, that's a great profile picture. Perfect.
Thanks.
Elaine,
yeah,
hi.
and now
Hey.
the profile moves. Hello.
Elaine, it's so good to see you. We've just been chatting away, and we're like, oh yeah, we have a guest that we need to bring in. So thought that was pretty important. Hi.
Hi. It's so great to see you both too. How have you been?
Things have been good. We were just reminiscing a little bit about how we started in grad school at NEC, and we didn't tell our audience that that is actually how we ran into you. You were teaching a career course in just how to succeed above water once we leave school. So we were catching up there.
Wonderful, wonderful, wonderful. Yeah, I love that so many conservatories and other colleges and universities as well have started kind of including some of this adulting content, maybe finance adulting content into their programs, because, I don't think you can talk about it enough, including after your career starts, because that's when you actually really, really need it, right? It's kind of hypothetical while you're still a student. And then it gets real fast.
Yeah, it gets real. Well, and there's always such a safety net too. When you have that education and you're in school right now, everything seems like it's going to be okay, which it very well could be. But it's always good to have a little bit more of education to empower you to be confident when you go out into the real world. So, but Jordan, catch Elaine up. I mean, we talked to Elaine, I think in 2018 or 2019, and for our episode on the Holistic Voice. But you have been doing many different things since then.
Yes, yeah. So I've been writing songs and performing them. That's the main thing I've kind of switched gears to. Around 2019 is about when I made that focus. 2019, 2000, early 20. Um,
Fabulous timing, by the way.
right? Yeah. I don't know. If I was to pick a year to start, it's probably 2020.
Yeah.
No. But yeah, so I've been doing a lot of writing with that, and figuring out the artist world of submitting to everything to perform live, and also to get music on playlists for Spotify and the social media, all that stuff. So that's what that's mostly taken most of my time, and also raising a family. I have two daughters, so that's been most of the time since I last saw you.
Amazing. How old are the daughters?
I've got a 4-year-old and a 16-month.
Amazing. Oh my gosh. So you have not slept in approximately 4 years, is what I'm hearing.
That's pretty accurate.
His hair still looks this good after
It's
a family like
so
that.
impressive.
Yeah.
It's so impressive. Doesn't seem real.
Oh, thank you. I appreciate that.
Yeah.
Yeah, part of the artist branding thing, figuring
Yes.
stuff out.
I haven't found that Zoom filter setting yet for fabulous hair, but as soon as I do, we'll throw that on.
Yeah, it's great to hear. And on the other end of the world, because Jordan is in California, I ended up staying after Boston in the Washington D.C. area, Elaine, and so a lot of things have shifted. I've still kept the thread of classical music in life through either church music, through I sing at the Washington National Cathedral, and have always been fascinated with voiceover stuff. So I'm doing a weekend radio show at the sister PBS station over there, as well as doing some voiceover. But the main thing is a 9 to 5 in nonprofit, which I didn't think life would go in that circuitous turn, but it did, and it's working great. Just finding the balance, but it's pretty lovely actually. Getting married next year too. Gosh.
Amazing. Oh my gosh. Just such good things on all levels, personal, professional, creative. And I love how, you know, 20 years ago, you probably never would have sat down and said, this is exactly how it's going to go. And yet it's going flawlessly, right? And that's, I don't know, I think there's something really comforting about that, right? Especially as we look forward 20 years, and we try to think about kind of where we want to be, and also recognize that, wherever we end up is probably going to be pretty great.
Exactly. If by your definition of flawless you mean the duck on the water where it looks flawless and then the feet are just like going crazy, then yes, I will take you as that. But how about yourself? I've heard many good things about you as well, Elaine. How are you doing?
Things are good. Things are really, really good. I too have a daughter. She is about to turn 13, which means she's also going to be making that annual pilgrimage that all eighth graders make to DC next year, which is pretty exciting. And I don't know, just things are good. The family is good. The family is healthy. We are staying sane, more or less. And professionally, things are wonderful. All of my time is spent helping really cool, incredible creative people with the business and financial side of their creativity. And I get to do that through teaching workshops and boot camps and webinars, and then both individually with folks as well. And so I am living the finance professional's dream as far as I'm concerned.
Oh, it's really amazing to hear. You've really found it seems like you've found such a fit for a lot of the things in your life, whether again personal, professional, and it's encouraging to hear that you have such success with such a large intersection of what we're going to be talking about today and what you're doing through there. And we'll find out a little bit more about your background. But for this whole audience, now that we've caught up, which it warms my heart. This was good for our sake here. Wanted to give a little bit more context for our audience who you are. So just as kind of a little blurb for everybody listening here, Elaine Grogan Luttrull is a certified public accountant and author of Arts and Numbers, financial guide for artists, writers, performers, and other members of the creative class. She also is a business owner, founder of Minerva Financial Arts, which connects financial decisions with creative goals, always an important connection to make for all of the artists out there. Jordan and I thought that it was really important from our very first episode to all the way to now, years later, to bring Elaine on because she has such a wealth of knowledge of financial literacy. And I don't know about you, Jordan, but especially me, when I was going out into the dark unknown after grad school, I was at a loss. I was just focusing on my technique. I didn't really think about the financial implications. And now after grad school, a couple years in, I've only continued to scratch the surface a little bit more, but thanks to Elaine's conversation, I was on a really good path. So Elaine, I just wanted to kind of give that little blurb and just introduce folks out there on where we're at.
Yeah,
Perfect.
I just want to add to that too. Our conversation has extremely helped my decisions on what I want to focus on, and we'll get into that with your book as well. But breaking things into the lead role, supporting role,
Yes.
sort of thing on what's really serving your art and what you need to keep it afloat financially. And yes, I'll let you break into that because I'm sure you'll be a lot better at doing it. But that's informed a lot of my decisions over the years. So thank you for that.
Oh my gosh, you're so welcome. That just thinking about different categories of how you earn money, right? Even just having the framework to do that and permission, by the way, to prioritize different categories based on what you need. I constantly hear from folks that is probably the most impactful thing in the book and in sort of what I talk about. I always think it should be tax related, right? But the permission to earn money in these different categories and really kind of own what that looks like for you is constantly what comes up. So I'm glad that resonated for you as well.
That's
Awesome.
great. So we talked a little bit about your present, Elaine. We talked a little bit about your atmosphere around you, but can we talk about your background a little bit, your past? What originally involved you in finance? How did you get to the path that you are today?
That's such a great question. I think the short answer is I listened to the wrong parent in college. I had one parent that was a follow your dream, pursue your passions kind of parent. And I had another more practical parent who didn't quite say get a real job, but there was definitely sort of nudges toward building a skill. So that's how I ended up in accounting. It was a really practical, economical way to get a master's degree quickly and a certification that I could use that would pretty much guarantee a job wherever I wanted to be. And where I wanted to be was in New York. So I found my way to New York working at one of those huge institutional firms. And as much as I loved it and learned from it, it never really felt like enough. So I started volunteering with the Arts and Business Council of New York. And this is a great organization that pairs business professionals with small nonprofits that need some sort of business help, right? So I started doing tax returns for these teeny tiny arts organizations, and they were all pro bono. And then that ended up helping them with their budgets and helping them sort of use Excel and track expenses in a way that would then help them tell their story more impactfully, right? Because the point of accounting or finance or money or anything is to complement the main thing you're doing, right? And so that was sort of always the lens through which I approached it. And I liked that work so much and found that I was good at it. I was good at the communication piece and the technical piece, that I ended up applying for jobs in the arts sector. And they were accounting and finance jobs, but that's how I ended up working at Juilliard. And I was the director of financial analysis there and got to do just really cool, impactful work while you were listening to this music waft down the hallways, or, you know, stepping over dancers who were stretching in the halls. I mean, it was such a magical place to be doing really complex, interesting finance and accounting work. And then, of course, that expertise translated to the groups I was volunteering with, and then led to some more kind of speaking engagements, which led to sort of building a practice around serving arts organizations and then later individual creative folks in the arts, and sort of using that technical expertise to support whatever their goals happen to be.
Wow. What a testament to following your heart. It's a perfect pairing of your technical prowess with following your passion, and what a cool intersection to show, especially this audience, that you can meld such unique careers into something that really you value yourself, and it seems to bring you a lot of joy. So what a cool case example for living your passion every day, Elaine. How cool.
It is pretty cool. Yeah. Not unlike you, I never would have sort of written down in third grade that this is what I was going to be doing. Right. And yet, you know, you just sort of, I don't know, you say yes to things that you find interesting or fulfilling or feel sort of drawn to in some way. And then, you know, enough yeses end up into some sort of, you know, career or business or company that makes sense. Even though, like the duck, right, there's a lot of chaos happening, you know, all around us, right? And that's okay too.
Yeah, it's true. It's true. Well, it's really cool to see where you've come from and how successful you are here. I think it'll really inform a lot of the conversation here. What I'd love to start off our conversation with is just some of the building blocks, just the basic understanding of financial wellness, so that we can level set with all of our audience members from a spectrum of, hey, I have retirement accounts and know what Roth and 401k is, to I know that I should have a budget. What's going on there? So can we start in terms of your opinion, or what are some of the building blocks in financial wellness?
Oh, I love starting there, right? Because you start with where folks are and you meet them there, right? No matter what experience they bring to the conversation. For me, there are three kind of major building blocks, and then some sub blocks within that, and then you can go real deep into any of them. But the three main ones are a snapshot and sources and uses. So the snapshot is essentially, we'd call it net worth in financial terms, but for me, it's a listing of the things you have and the things you owe, right? And we pick one day And we say, okay, what do you have and what do you owe on this day? And if we're adding the math, we calculate your net worth from that. And net worth is really just if you were to sell everything you have, pay off all your debts, and then move to an island, net worth is the amount you get to take to the island with you, right? It's the amount that's left over. So I'm less interested in what the numbers are and just more interested in kind of what's there. Do you own an instrument? Do you own real estate? Or do you have checking accounts and savings accounts? Do you have any extra investment accounts? Maybe from that one job you had like 8 years ago that opened something for you, right? And then getting a sense of kind of what's in that liability or that debt section, right? Is there a mortgage? Is there a car payment? Are there student loan payments? Is there hospital or medical debt, right? We just start with kind of a snapshot, right? Because that's the starting point. And then the second building block is sources. This is where money comes from for you. What are the sources of income you have? Not what you've already gotten, but what's sort of the new stuff coming in and where is it coming from, right? New money in. And then we look at uses of those dollars. And the uses of those dollars, I like to put into 4 different categories. There's how much you're going to save, which I like to start with. It's not always easy to start with that, but I still like to start with that. How much you're going to set aside for taxes, because we know if you are self-employed or have any gig work, you are responsible for your own taxes and they can add up quickly, especially on both coasts where you all both are in high tax jurisdictions, right? So those are the first 2 blocks. And then it's business costs and human costs. And so those are the 4 different uses of funds, right? So we start with a snapshot, then we say what new is coming in, and then we say where is that new money going? And then we end with a new updated snapshot, right? Because if you've saved some extra money, that means things have changed in your asset category. Or if your human costs include student loan payments, maybe that balance of student loans has gone down, right? So then we just check in with this snapshot once a year or so and sort of use those 3 main buckets, snapshot, sources, and uses, to kind of keep track of the major things of financial wellness.
Gosh, way to break it down into those 3 digestible buckets. So, and you were saying you would check in with that once, you say once every 3 months, once a quarter, once, how often would you say to check in with it?
That's a good question. It kind of depends on the rhythm of someone's life, right? Okay. Like if you're at like a really kind of stable point, things are pretty predictable, maybe we check in once a year. If you are in like chaos crisis mode, you are really trying to figure things out, I might check in monthly and just say, okay, let's redo this right now. If you're somewhere in the middle, quarterly probably makes sense. Or maybe, maybe at the beginning and end of a performance season or something like that, right? Some sort of rhythm where it's not disrupting the other things you have going on, but it's giving you a chance to check in with those numbers.
Okay, that makes sense. Now, in terms of, especially for this audience in particular, when it comes to those liabilities or those expenses, what if, especially for a lot of teachers, that's a big audience here, what about those out-of-pocket expenses? If you have a studio or you have a classroom that you need to buy supplies for, how should we be tracking those, just business expenses in general? How can we talk a little bit about that topic there?
Yes. And you mentioned, especially for educators, but really for anyone in the arts broadly, and specifically in music arts and performing arts, right? You're already earning income from a lot of different things. And this is the part where I think your audience might start to hate me a little bit, so I apologize. Whether or not something is deductible depends on how you are paid, which is stupid, right? It's really, really stupid. But let's pretend you are a full-time educator at the college level. You are teaching students maybe at NEC, maybe anywhere, right? You're a full-time educator at the college level. You are paid as a W-2 employee. And let's say you want to bring in something for your classroom or your students or a lesson you're giving. that is not deductible at all. You are a W-2 employee, and if you are an employee of someone else, you, the human, get no deductions. In a perfect world, your employer would reimburse you for any of those expenses you have, but we all know we are far short of a perfect world. So, general rule, if you're an employee of someone else, nothing is deductible. But if you are self-employed, oh, sorry, go ahead, Jordan.
I was just going to say for W-2 work specifically. So
correct.
If it was like a contract 1099 kind of thing, that's
totally different. Okay. Totally different, because that falls into that self-employment world, right? In that world, you are not an employee. You are your own employer and employee. You get all the deductions. So anything that is ordinary and necessary and effectively connected to your trade or business is deductible. And so from your perspective, you're just going into a classroom and teaching, right? You might not care how you're getting paid, right? Which makes it even more important that you're kind of keeping track of expenses for W-2 work, not deductible, and expenses for 1099 or contract work or your own studio, right? If you're teaching students out of your apartment or your house, you're not 1099ing yourself, you're just taking the income, right? That's self-employment income. All the deductions apply in that case.
Okay, that makes sense.
Yeah, super annoying, right? But, it does make sense. And what we would want to do is whatever system you're using to track expenses. Maybe it's Google Sheets, maybe it's something like Mint, maybe it's FreshBooks if you're sending a lot of invoices, or Wave or QuickBooks, right? No matter what system you're using, what we want to do is go ahead and just track everything. And then at the end of the year, we can sort out, oh, these things were for this particular gig, these things were for this thing, right? And we can get clear on what is deductible and is not deductible. But if you track it, at least then you can make a more informed choice about really what you're spending and why.
Exactly.
Great. So I have a scenario question for one of those things.
Yeah.
Let's say you have W-2 work teaching at a school, but later on in that day, you have a choir rehearsal that is paid in more of an independent contractor kind of basis, 1099 thing, on that same location. Mileage. What happens with that?
Great question. What I would probably do, we know that mileage to and from a W-2 job is not deductible, right? Because that is W-2 work, it's commuting, right? Not deductible. But it is deductible for the 1099 stuff. So what I would probably do is not deduct on the way there, but then I would probably deduct on the way home, since that's related to the 1099 job. I'm almost splitting the difference there. And then the business purpose would be, travel home from choir rehearsal for XYZ project, right? So that you would know in your records it is related to that 1099 work.
Great. So even though you are going to be you have to travel there in the first place, you're going to the W-2 first, so you're not going to count going there.
Right. That's how I would handle it. Yeah.
Okay.
In a slightly different fact pattern, let's pretend you go home between them and then go back. Yeah, in that case, I would not deduct any of the W-2, of course, but then deduct the back and forth for the choir. So, I probably wouldn't do that. Bad for the environment, right? But, I would just split the difference.
So Elaine, what about, now the juices are flowing and I promise we can get back on track with the conversation, but what if you're an independent voice teacher and your voice studio is in your home? Is there any way that you can have any tax benefits on that end of things?
Yes, great question. So you have to be in the business of being an independent musician, which includes, performing and teaching and all that other stuff. So that means you're regularly carrying this activity on. You're not just teaching one lesson one time. This is something you're doing with the intent of making money from it, making a profit. So as long as you're running a business, then we are in, I call it Schedule C world. This is where you're reporting business income and business expenses. And one of those business expenses is for what they call business use of your home. Now, this is on a very special line on Schedule C. It's all by itself, which means it can be scrutinized, right? Because it is isolated from all the other expenses. And the rule is that if you have a space that is used exclusively and regularly for your business purpose, then you can deduct expenses associated with that space. It has to be your principal place of business, and you can't have other places where you do administrative work related to your business. But as long as you're kind of clearing those hurdles, especially that exclusive and regular use part, then you can deduct the business use of your home. And the way we do that is we measure the space that is exclusively and regularly used, and we take that space as a percentage of your overall dwelling space. And then we calculate that percentage times your rent or your mortgage, your utilities, maybe your Wi-Fi, if that's applicable, right? And then that's how we calculate that business use of your home deduction.
Spectacular. See, again, these are things that you might not think of, you might not know, and these would be really helpful, especially for an audience of teaching professionals here, just to think through that and everything like that.
Yeah.
So that's
let me raise one sort of thing though, just because many of the teaching professionals probably have a space at home, maybe where they rehearse, where they perform, where they teach students sort of privately. And if you teach in an elementary school, or if you teach for a college, and maybe, I don't know, during a massive global pandemic, you are told to teach from home, we want to be really careful that we're not mixing that exclusive and regular space between a W-2 job and a self-employment job. Because remember, nothing is deductible for a W-2 job, right? That's why in 2020 and even 2021, people weren't getting this deduction because most folks were working from home for their W-2 jobs, right? So we got to, again, just keep coming back to, right, is this related to my business or is this related to someone else's business? And you don't get deductions for someone else's business.
Got it. And that's why it shows the importance of tracking your expenses well and understanding, how to do that. Okay.
Yes.
Yeah. Which is super annoying. I totally apologize just on behalf of world.
Yeah, that was really helpful to see from that lens. So could we talk for a second about some maybe more expenses that we might miss as a musician? So one that comes to mind is like concert tickets, going to see a performance that might inform, you as a teacher or as a performer yourself. Can we talk about some of those that we might miss?
Yeah, definitely. I think that's a great example. And what makes me comfortable saying those types of concert tickets, for example, are likely deductible is what you said. It's going to inform your self-employment teaching practice and inform the repertoire you might be playing. Maybe you're going to hear the acoustics in a space you might use, or to see how a conductor operates because you might work together at some point, right? So there is a business purpose associated with that, right? So the general rule for expenses associated with your business is they are deductible if they are ordinary, which means common and accepted in your industry, and necessary, which means helpful and appropriate for your trade or business. They also have to be effectively connected to that trade or business. So everything you're thinking about sort of tickets, or maybe you're going to see a theatrical performance, because you're writing a new book for a musical or something, right? I think that meets those tests of ordinary, necessary, and effectively connected to your trade or business. But it's also easy to see how that could be really abused, right? So it is the taxpayer's obligation to document how those things are ordinary, necessary, and effectively connected to a trade or business, in case any taxing authority has some questions, right? So again, not to just keep harping on this record keeping thing, right? But tracking the expenses where you're documenting that essentially becomes your justification for claiming the expense. So concert tickets fall into that category. I think meals fall into that category as well, right? Let's say the three of us want to go out to dinner after this. It could be just three friends going out for dinner. Or if we talk about the podcast, maybe your future goals, maybe different ideas you have, maybe I ask for feedback on how I explained something. all of a sudden that is effectively connected to the trade or business as opposed to friends hanging out over dinner, right? So that then becomes the difference.
Not
I
to
think we've
mention
already
the money
also,
on
go ahead.
I was going to say,
Oh,
not
the
to mention
airfare.
the money on airfare we'd have to pay to get together and all that.
Yeah, because you all are flying to Ohio to have dinner
Right,
with me,
right,
right?
right,
Perfect.
exactly.
Yeah, but also, I mean, travel expenses, as long as the primary purpose is business related, are generally deductible. Meals we talked about. In fact, in 2021 and 2022, we have a special tax rule that meals are 100% deductible. Normally, they're only 50% deductible, but as part of some of the pandemic relief legislation, Congress decided that meals in restaurants would be 100% deductible last year and this year. Not true in 2023, and I would not hold my breath on that getting extended. But that's a really sort of interesting thing that is different right now, which is kind of nice. We also talked about mileage. Jordan, you're in California now. Are you driving an electric vehicle?
I'm not driving an electric vehicle.
Okay.
Yeah.
If you were, you would still get the same mileage deduction because the business miles driven deduction is meant to support operation of the vehicle. And yes, typically that includes gas and oil changes and maintenance and all of that. But there's no special mileage rate if you drive an electric vehicle or a hybrid or a plug-in hybrid, right? So you get the same business miles deduction for all of the personal vehicle miles you're using for business purposes.
I don't even think it counts for me driving in DC. We're just in bumper to bumper traffic, so it's just idling in DC.
Yes, but you might, because you have access to a great public transportation system, right? You might also track, swipes on the subway system, right? Or those types of vehicles, or maybe you hop on one of those electric scooters and zoom around all the idling cars, right?
Yeah.
Again, those types of auto-related or transportation expenses are deductible with a business purpose.
Sure. Well, speaking of, go ahead, Jordan.
I was just going to say, we've talked about tracking expenses. Can we talk about effectively tracking expenses?
Yes.
So maybe either setting up a spreadsheet and doing it really well, or using some sort of platform. What do you recommend?
So depending on kind of where you are in your career and how you work best, right? Because we all know we have sort of preferences about kind of how we organize things. Let your preferences drive the system, right? Instead of trying to build somebody else's system and apply it to yourself.
Yeah.
But sort of the easiest low-hanging fruit way to start is to open a Google Sheet and set up 5 columns. The first column will say date. The second column will say kind of vendor or counterparty. The third column will say amount. The fourth column will say category. And the fifth column will say business purpose. And then with those 5 columns, you are capturing all the information you need for the IRS. That category column is kind of a bonus. The IRS doesn't really care about that, but it's a good way to keep yourself organized. So your category would probably match your tax form, and it might say meals, right? So that means, you might have 7 different restaurants, but they all fall in that meals category. And so if you're tagging things kind of consistently, at the end of the year, you can sort the data, or if you're really fancy, you can write some sum-if formulas to kind of summarize it in an interesting way, right? So, you've got it there and you're kind of thinking about what you might do with it. So that's kind of the easiest way. If you wanted to not type everything in, you can export data from your bank account or your credit card statements as something called a CSV file, comma separated value, CSV. And that's basically Excel data, right? So you export the data, you plop it into your Google Sheet. You'll have to format it to make it pretty and add your own category, but then you don't have to kind of type everything. So that could be a way to save some data entry time. So that's kind of like the easy entry level way. And PS, you can do all of that just on paper if you want to do it sort of an old-fashioned way as well, which is perfectly fine. Ledger books still exist. You can still buy one. They're very retro and very cool, right? But you have to do all of your own math.
Let's bring.
When people, go ahead.
No, let's bring retro back. No, go ahead.
Yes,
Elaine.
bring retro back. At some point, people often grow out of Excel or Google Sheets. And usually that happens either when the volume of transactions is so high, it's just taking you too much time to sort through, or when you need to start kind of sending invoices and
Mm.
accepting like automatic payments. And usually, though, either of those points is when someone will opt for something like Wave or FreshBooks or QuickBooks. Those are all really great platforms where you can link these softwares to your bank accounts. So they are automatically pulling in all that data. And they will also guess at the category, but you still have to check it. And you still have to put in your own business purpose, right? So we're not automating everything. But all of a sudden, if you're starting to send invoices to families of students you have weekly or monthly, for example, they're paying with a credit card, and those payments are automatically being deposited, and that income is automatically being recorded. So that starts to save you some time. But those platforms aren't free, right? So that is the eternal trade-off. And once it makes sense from a time perspective, or when you need to start sending invoices or accepting payments that way, that's when people usually make the switch.
Yeah. I mean, I know just personally the amount of different revenue streams that are coming in for the different things I'm doing, the time I spend um, on that is massive. So if you're
Yes.
spending, I don't know what it is, like 100 a year or something for that, just breaking down what you're paying yourself by giving yourself that time back is an important consideration.
Oh, it's huge, right? And sometimes you need to like live in the weeds first before you're like, oh yeah, this is worth it, right? But to me, that's important, because that means when you set up, say, QuickBooks with, those 5, 6, 12 different income categories you have, you already know what they are, right? If you are the day after graduation from grad school trying to identify what that they might be, at that point you're mostly just guessing, right? So having some of that in the weeds time means your system is going to automatically be better for you, because it's going to reflect
Hmm.
your reality.
Right.
Yeah, that's great.
So Jordan, we were talking a little bit. So this is a lot of surrounding our day to day, and hopefully having a little bit of a savings for what we're doing. You had a really good question that we talked a little bit before this episode started about our long term goals. Did you want to ask Elaine about that stuff?
Yes, I would love to talk with you about retirement funds and when we should start really thinking about that. Because as we graduate, we have student loans to think about, and also, when is the next gig coming in to think about? When is the right time to start um, funding accounts and how much and all that?
Yes. Oh my gosh. Are you ever going to retire, Jordan?
Well, no.
No, right? Austin, how about you? Are you going to retire?
I think I like my job too much, so I don't think I
Right.
want to retire. But yeah, yeah.
What's so interesting, and I didn't mean to put you on the spot about either of those, but what's so interesting about that is often, in addition to the question of, A, how can I save? But B, is it better to pay off debt or save? Often C is, I'm a creative person. I'm never going to stop doing this, right? So does it actually even matter for me?
Right.
And to me, that's the most interesting thing, because if you are picturing like bad garments and flip-flops on a golf course somewhere, like that is no longer what retirement is looking like
Yeah.
for anyone who's probably under 50 or 60, right? Increasingly, we're thinking about retirement, quote unquote, as mostly just like a future phase when your income is coming less from new money coming in and more from assets you've saved over time,
Mm.
right? So again, those fundamentals, your snapshot, your sources, and your uses. Your uses are still going to exist in retirement or any future phase, right? But it's just that sources piece that changes. So I hope you never stop creating. I hope you continue performing and teaching and changing the world in songwriting, until you physically cannot anymore. And the idea of having, some amount of money saved up, and that amount kicking off some income to you, means maybe you can say no to more things in that later phase, or maybe you can give yourself an extended residency somewhere, right, without having to worry about sort of bringing new money in. So the way we get there is we build this pot of money. So some traditional financial planners will tell you start as soon as possible because compounding, right? And I get it, right? That is, math will tell you that is good and accurate. And that's totally unrealistic for a lot of folks, right? So I have had so many people in their 30s work with me and say, I'm so sorry, I never saved money before. And it's like, you're fine, right? You still have like probably 30, maybe even 40 years before we're thinking about this. Like, so, the idea of having shame for not starting, right away is as bad as, never starting, right? So start whenever you want. And maximize any free money you can get. So that means for that 9-to-5 NGO, for that W-2 job through a school, right? You probably have access to a retirement account. So if you have access to it, go ahead and just use theirs, right? Contribute as much as you feel like you can to your retirement. And if there are matching dollars available, take all of the matching dollars you can get, because that is just free money. So that's kind of the easiest way to play along. And if you don't have access to that, or you can do a little bit more, there's something called an IRA, an individual retirement account. And as long as you have earned income, you can open one of these. You do not need an employer that's, actively paying you or sponsoring a 401k or something, right? You just have to have earned income. And you can contribute up to $6,000 every year. So if you're able to save maybe $1,000 this year, an IRA is a great way to put that towards your retirement. If you're in a position to save more than that, and you don't have access to an employer-sponsored plan, but you do have some of that self-employment income, then we would probably look at setting up a retirement plan through your own business. The most common ones are called a solo 401k, which is just like what it sounds. It's your own business starting a 401k for yourself, or something called a SEP IRA, SEP. That stands for Simplified Employer Pension. So both of those have a higher contribution limit than the IRA, right? So if you are in a position to contribute 15,000, 20,000, maybe even a little bit more than that to your retirement, a solo 401k or a SEP IRA will enable you to do that. Although there are still some other limits based on the amount of income you have and based on sort of the overall amount you're allowed to defer. But that's what I would do. Number one, take advantage of free money. Number two, if you can contribute an additional 6,000, an IRA is a great way to do that. Number three, if you can contribute more than that, a SEP IRA or a solo 401k will get you there. Start anytime. Wow. No shame.
Gosh, that's thank you for breaking it down, Elaine. Since we're getting close to Halloween, I wanted to tell you a scary story. I was talking with my friend who was just beaming that because he had his own employer, and he said, "Oh, my 401k, it's auto contributing, and I'm just so proud of myself because I've been saving and it's been going well." I'm like, "I'm so happy for you. That's a spectacular thing to know that you have that security long term." And then he goes, "Oh yeah, same thing with I opened an IRA like 5 or 6 years ago." And he goes, "Yeah, I've just been letting it do its own thing." And so correct me if I'm wrong, but I told him, I said, so the 401k and the IRA in terms of contributions are a little bit different. The 401k, it automatically will go ahead and do that for you once you select whichever fund you want. But the IRA, it'll act just like a bank account if you don't assign it value, correct? And his face kind of dropped, like, "What do you mean about that?" So can you I've been trying to scream it from the rooftops, but is that a correct statement? Or please correct me if I'm wrong, and I can go back and call him.
Yeah, that is correct. I see it mostly come up when folks open an IRA through kind of their main bank or financial institution, because for those institutions, kind of the default option is cash, right? Which is fine. You're still getting the tax benefit. The dollars are still there, right? I'm not terrified, right? But it's not investing and giving you any of those longer term gains. So open the IRA, transfer the money, and then make the investment choice so that it goes into something that is not cash or a cash equivalent. Unless you're like 78. If you're like 78 and you're funding your own residency for next year, I'd like you to have a whole lot of your retirement in cash, right? But if your friend is younger than 78, especially substantially so, yeah, make that extra investment choice. Now, if you're opening something at a Vanguard or a Schwab or a Fidelity, usually it's harder to let it live in cash. And they will be a little bit more proactive about, okay, you opened it, now you must choose these things.
Good.
So, depending on kind of where you're going, you may not have defaulted into that, but you certainly could have.
Well,
although, frankly, your friend kind of looks like a genius right now because, the market's down 20 some odd % this year. So, that IRA balance is probably holding steady.
Yeah, he did great. He did great and he didn't even know it. That was spectacular. No, that's really, really helpful to know. And speaking of the markets, the big question that's been on my mind lately has been really inflation, the rising cost of living. How have you seen inflation affect the artist community? How have you been dealing with this with your clients? I mean, how has it been going? How's the landscape for you?
Yeah, it's brutal.
Yeah.
It's brutal. I have a pastry chef I work with who has shared that the price of eggs might put her out of business, just simply given the input costs she's facing, because inflation is affecting us in a couple of different ways. Number one, everything we're paying for is getting more expensive, whether it is eggs or subscriptions or, travel or rent in that home studio you have, right? So all of your business costs, or many of them, are growing and getting bigger. While at the same time, the same thing is happening to our clients. So if your clients are all super high income, not price sensitive at all, you're not noticing the stress from your clients. But if they're not, as is often the case for families with students you might be teaching, or folks who are buying tickets to go to a performance, or folks who might be, canceling a Spotify subscription and hurting your numbers, Jordan, because, they're just looking for ways to cut costs, right? We're seeing it on sort of the demand side for our businesses as well. So that's tough in both directions. While at the same time, interest rates continue to go up, and that's really good for savings accounts, but it's awful if you have credit card debt, or maybe you have a home equity line of credit. Those rates are often variable rates. So that means your debt situation is maybe getting a little bit more precarious without you doing anything, which is tough. So I would say, if I were to share some things to think about, number one, nothing lasts forever, right? So this is, at some point, things are going to stabilize a little bit. We might not ever in my professional lifetime get back to like 2.8% mortgage rates, but things are going to like normalize a bit, right? Yeah. And we're starting to see signs of that. The rental market last month, started to not necessarily increase, but started to taper even a little. So that is good news. And if you have any debt, figuring out how to get that under control, maybe consolidating it, maybe moving it to a lower interest option and paying it off. Those are good strategies. And if you have the opportunity to lock in any prices before they continue to go up, that could be good. Maybe something like a Zoom subscription. You're going to, pay for the next year instead of paying it on a monthly basis, just to kind of lock that in. So, we can look for ways of trying to cut our costs. And you can say, you know what, it's a good time to invest in my business. It's a good time to, not necessarily save more money because, savings are quote unquote losing value, right? So maybe you buy that new instrument, or you make that repair you've been putting off, or you invest in that new piece of equipment that's going to help you professionally in some way, right? So it's not a terrible time to be making those choices either. But it's tough out there, man. And not to be delusionally optimistic here, but creative folks deal with tough things all the time. So, this is just another thing that we acknowledge is hard. It is increasing the strain and the overwhelm, and you can do it. You'll get through it.
Gosh, always appreciate Elaine advice at the end of the day. It puts a smile on my face. And Jordan, how many times have we heard in the past couple of years, historically, this has never happened before? Yep. How many times have we heard that now? It's crazy. So you're right. We can get through this. But Jordan, you had a question.
Yeah, I was just going to say, while we're talking about kind of working through those different scenarios, I think this would be a really great time for you to recap your perspective on prioritizing your income streams based on your art and fulfillment.
Yes.
I love how you laid that out in your book. So I would love a quick recap for our listeners.
Yeah, you bet. This is the idea of a portfolio career. So a framework we use to think about organizing different ways of earning money. So the main way, the heart way, the thing you would do if you could do anything way, we call that your starring role. That's kind of the main thing. And the trick there is to set appropriate rates, to say yes, kind of with enthusiasm intention, and then also to protect work in that area. That's not the work you want to sort of feel like you're compromising on, right? That's the core thing. And then you've got this second category, your supporting cast roles, which are related to the main thing, but not exactly the main thing. And for many musicians and many performers, that includes teaching. It might include performing in something that's maybe not your dream venue. Violinists playing Pachelbel's canon at weddings often falls into that sort of supporting category, right? Yeah. Like, yes, we can do this in our sleep and we get paid for this, and it's not necessarily kind of the main thing we want to be doing, right? Maybe working at an arts organization and learning about sort of bookkeeping and grant writing falls into this category, because you're building skills that are supporting kind of your main thing, right? So anything that is related, adjacent to the starring role, falls in this second category. And then in the third category, you've got everything unrelated to the starring role. We call this production assistance work because it is the work that often the audience in the analogy never sees, but it is vital to making the show go on, right? So, this would be the stuff that is totally unrelated to your starring role, but it still has benefits. Maybe it is health insurance, or maybe it is contributions to those retirement accounts, or maybe it's just stability and predictability in your schedule that gives you the mental and emotional space to then be your best creative self. There's a writer I work with that also happens to be a fantastic bookkeeper. And so he works as a remote bookkeeper for about 2.5 hours every morning. And for him, that sort of routine and rhythm in his schedule means as soon as he's done, he is in sort of a perfect mental space to write. And it's not on his website, it's not on his Twitter bio, right? But it's giving him a little bit more financial security and this intangible sort of schedule security that serves him really well. So, those are kind of the categories. And as we were talking earlier, sort of early on in your career, you might have some ideas, and then, you might kind of settle into things that feel like they're working for you. But especially over the past couple of years, I think people have sort of felt unmoored, maybe a little unbalanced, sort of out of whack a little bit, if I could use a technical financial term, right? And so what I started doing with a handful of clients, especially like in 2020, like summer and early fall of 2020, we would do this portfolio career audit, right? Where we basically look back and look at everything they earned money from, and then they would categorize it starring, supporting cast role, or production assistance work. And then this is the audit part. We would say, okay, what did you earn from each of these things? How much time did each one take you? Like real honest time, like the prep time, the execution time, and the recovery time, right? Because often there was a lot of that needed, especially in 2020. And then how fulfilling did you find each thing? And when you look at those kind of three metrics, it's often pretty easy to see which gig, which category, which role is kind of throwing you out of whack. So you can say no to more things, if that makes sense. You can shrink the time you're putting into things if you're able to do that. Or you can charge more. You can say, this is super fulfilling. I cannot spend any less time doing it. And I really need to look at the rates I'm charging for this, and here's why. So it gives you a little bit more information so that you can have an empowered conversation about how you're going to spend your time and earn your money.
Yeah, Elaine, that's a big thing. You've brought it up twice now, the power of the importance of setting rates that will help you, but also I think that will help the industry itself. I still feel like, especially in a lot of these whether it's corporate events, weddings, unfortunately funerals, church, gigs, it's since it's such an individual basis, sometimes taboo for some people, sometimes uncomfortable for some people to talk about what their rates are. It's hard because then the rest of the artist community doesn't know where there's a standard here. Like if you ask any lawyer, they will tell you exactly what rates they have for their particular firm and where they're at, and they're not going to go down from there. But I feel like there's not, I mean, Jordan, correct me if I'm wrong, I still feel this though, is that if you're at a wedding or some kind of entertainment event or elsewhere, I still think that us as artists have a potential of getting taken advantage of if we're not clear on what our rates are as musicians.
Yeah, and I think there is a lot of room to change it for your own mental health and well-being. Just a quick story from that. I just recently performed a wedding with my sister, and we finished and we were squaring up with the person at the end for the finance bit, and I was trying to remember how much it was because I had gotten an email, and once we had worked it out, I told him the price, and he was like, "Oh, great," and turned to my sister "And what did we decide for you?" And I had decided that for the entire package, so I'm like, "Oh, I could be charging quite a bit more for this service." So that was a good wake-up call for me a bit.
What did your sister say? Did she double your number?
We're like, no, that was the decided price. Let it go at that. But
I mean,
so
that's powerful, right?
Yeah.
Almost, I say this to my visual artists pretty regularly. You are not your customer, right? Because sometimes, we think about, oh my gosh, I don't know that I could ever afford fill in the blank for that thing. And that's okay. You're not your customer, right? So, I think, it's tough. It is an art, not a science. And, we constantly learn. I think there occasionally is some research that'll surface about, this is the average, whatever kind of price, but often it's so nationalized or so averaged out, it's not necessarily helpful, right? Depending on kind of where you are, what your discipline is, right? But I always come back to kind of the four things that inform your price. It's what it costs you to do something, right? But that can't be the only thing, because you might not need to rehearse for that wedding because you know the repertoire inside and out, right? So it might not have an extra cost for you, time or money, right? But then we also look at what others are charging. And this is where, Austin, I think, having your network get to a point where they're comfortable being a little bit more candid about sharing those stories and sharing rates or ranges, I think is really helpful. Then we think about your customers. What are they willing and able to pay, right? Because sometimes those are two different things. And then we look at your competencies. What makes you the absolute best, most capable person of doing this thing, right? And then those 4 things inform the price you charge. And your competencies change over time, your costs change over time, right? All of these things are evolving, just like your rates can and probably should be.
Yeah, that's wonderful.
Yeah, and I think it's an important point that it's like doubly damaging to work at what you feel like isn't your value, because you're getting discouraged and you're also not making as much as you could at the same time.
And you're pulling down the average, right? I mean, how many times have you said like, well, I'm not paying that. My brother's sister's cousin's daughter said she'd do it for $25. And I was like, well, great, go hire that person, right? I mean, I think there is a recognition that, professionals do something in a way that's different from someone who would charge $25. And anytime a professional is undercharging, you're kind of dragging down everyone. Exactly. So if you are going to undercharge, say, well, my normal rate for this would be $5,500. I'm happy to do it for, and then whatever, right? Because at least then you're anchoring the price at a more reasonable rate.
That's a great way to frame the conversation too. That's really wonderful to keep it standard. Well, we are kind of nearing the end. There's a couple of really important questions, very timely questions that I want to ask you, Elaine. I want to get your advice and opinions on. The big one being the student loan forgiveness program that is on the top of a lot of minds right now. What news can you share? What should we be doing to prepare? I know that recently there have been emails arising. So what updates do you have?
So the forgiveness portal is open. The application has been released. It was beta tested the first weekend it was out. The beta test is over. It worked. No servers crashed. Everything is good. And the application itself takes virtually no time. It asks for your name, your social security number, some identifying information, and then it asks you to verify that you meet one of the income tests, which is that you made, if you're a single individual, less than $125,000 in 2021 or in 2020. You can use either year to meet that income test, which is really good news. So go ahead and do that. Studentaid.gov is where you can find that application. Super quick, right? If you're getting like phone calls or like, hey, come to this site and do your application, ignore all those, right? Because those are all scammers. But studentaid.gov, put your application in. If they need additional information to verify your income, they will ask you for it. Maybe they will, maybe not, right? If you had been on an income-based repayment plan, they've already got what they need to approve. If you were not on one of those, though, you might need to provide a tax return or proof of income, which they will ask you for later. So that's the really good news. The other thing to note is it was sort of quietly happening at the same time, but there's that public service loan forgiveness program, right? So the way it basically works is if you work for a nonprofit, an NGO, some sort of public service entity for a period of time and make on-time payments for your student loans, under any plan, income-based repayment or any kind of plan, right? After 10 years of consecutive payments, you get the student loan balance forgiven. What's special about right now, through the scary date of October 31st, the rules on what count for that public service loan forgiveness have been loosened quite a lot. So if you had a part-time job once upon a time, or you had some situations, maybe you were teaching at a nonprofit, right, working part-time, go ahead and update your service for that plan to get as many work credits as you can, because you might end up with extra dollars being forgiven, which would be really good.
Spectacular. Oh, yeah. Thank you for the news. I filled out the application. I'm just crossing my fingers. I'm very excited.
Good for you. I'm happy for you. That's fantastic.
Yeah. It's kind of an exciting, scary time. So we'll see what ends up happening there, and appreciate you giving us an update about what's going on. And to your point, yeah, please, I'm sure that scammers are going to come out of the woodwork. So thank you for being very clear on where we go and all that we have to do for that. So That's good. Elaine, this
Actually takes 2 seconds.
yeah,
So
yeah,
that is
Yeah,
as long as it
yeah.
takes.
truly.
I think the official guidance is less than 5 minutes. And I was like, this cannot possibly take anyone 5 minutes to do.
I know, right? Yeah, just a
Yeah.
quick couple steps.
Yeah.
Elaine, this has been spectacular. Before we wrap, any final pieces of advice? What a comprehensive conversation! Really, it's just hit so many buckets, and I feel so. Like I did the day after our first conversation, I felt so empowered. I'm like, oh my gosh, I feel like so financially hygienic right now. Like I just took a shower. It was great. So just thank you for everything that we talked about here. Any other final pieces? Did we miss anything through our conversation?
Nothing major, right? We could continue this conversation for hours
Right.
more, going into even more, but I think sort of the idea that we're leaving feeling empowered is huge for me, right? Because there are so many barriers when it comes to money. There's information barriers, there's language barriers, vocabulary barriers, sometimes even just emotional barriers, right? So the idea that we can break down some of those and share actionable things and useful things, that to me is the most important part. And this is like a lifelong accumulation of knowledge, right? No one is going to master any or all of these things in a single conversation or even a single year, right? So, the idea that, yeah, we'll keep revisiting this stuff over and over and over again. And, 20 years into your career, it's going to be terrifying how much you know, right? Which is really, it's delightful. So I think as long as we keep that focus on the staying curious and always growing piece of it, I think everybody's going to be okay.
And isn't it funny how that mirrors our journey as musicians themselves? The day one is very scary to learn all the technique, but over 20 years, it seems like second nature. So that's a good way to put it. Thank you, Elaine, for doing that. All right, well, Jordan, I think is that a wrap? Any other final things that you wanted to mention?
That covered about everything. Thank you so much. There's a lot of stuff going on outside, so I've been muting my
Oh, okay.
microphone. But I really appreciate you coming in, and it's been a great conversation. Thank you so much.
Yeah, it's been wonderful. And what I'd like to do is, of course, Elaine, I want to make sure that folks can find out where you're going and where to go to if they have any final questions. If you have any more questions from Elaine's impactful work and the conversation that we had here, minervafinancialarts.com. We can put that in the chat, or follow the link in the episode description. We're going to put it up on our YouTube channel. In the description, we have minervafinancialarts.com, and you can follow for any questions that you have for Elaine. Maybe you're just curious about things that we just didn't touch on, and she would be a perfect resource for you. Please head to that website so that she can continue the conversation with you. That's really all we have for today. We also have, if you had any SNATS updates or wanted any updates delivered to your own inbox, we'll also put a link through there that the office has sent there. But that's really all we have for today. I wanted to thank you for joining our conversation from the fall installment of the Student National Association of Teachers of Singing Chat for 2022. We'll be back in the new year for another special guest, and that's all we have for today. We hope you enjoy the weekend, and see you next time for another impactful conversation.
Bye.